Tune in to the Real Estate Roundup with the River Counties Association of Realtors. Join us every Saturday at 8:30 a.m. on the Mix 104.1 as we explore the latest in real estate. Whether you're buying, selling, or just love real estate, don't miss our expert advice and exclusive insights. So grab a cup of coffee, sit back, and let's explore the dynamic world of real estate in our vibrant River Counties community. Catch Real Estate Roundup and make your property dreams a reality.
Welcome to the Real Estate Roundup from River Counties Association. I'm your host today, Lisa Calfin with the Source Real Estate Group, and I'm joined by Michelle Tennyson with Highlands Residential Mortgage. Thanks for being here, Michelle.
Thanks for having me, Lisa. I appreciate it.
Well, we are going to talk all things getting prepared to buy a home today. And if it's your first time venturing into the process, we want to give you some really good advice and tips on what you need to do and where to start. And so what I find is people will send me, a message, or they'll call me and they'll say, how do I go about buying a house? What do I do? And it seems a little scary to go through that process. And most of us are ended up with a mortgage because we don't have that kind of money in our bank account, just sitting around to go pay cash for a house. So it's more common than not to have a mortgage. And so we want to talk a little bit about when you're first starting out the process of thinking about buying a house. What are some of the key things that you tell people to take as their first couple of steps?
Well, the first thing, of course, is they need to give me a call because it may not be as bad as they think. A lot of times it's not. We'll pull credit and look at their credit. And once we pull credit, it's good for 4 months. So they have plenty of time to look, get things in order.
Save up a down payment.
Exactly. So obviously, if you're really thinking you're serious, definitely start saving money. One thing I do recommend, though, don't put large lumps of sums of cash into your bank account. Some people still keep mattress money at home.
Sure.
Under the mattress or in their safe deposit box or other
coffee
things
can.
like that. Yes, coffee can in the freezer. That's fine if you do that, but you can't, if you put large sums of money, cash, in your bank account, we can't source that because we can't prove where it come from.
Okay.
Coming from a coffee can at home doesn't count.
Right.
So the first thing is, if you're serious and in the next couple months you want to buy a home, you need to go ahead and get any extra cash put into your bank account. Because once it's in your account for at least 2 months, then it's what we call seasoned, and we can count it.
Okay.
So that's the first thing. If you have lump sums of cash at home and you're like, I'm going to save that up, and this is a good way that you've been saving your money by stashing it away, at home, that's fine. Just get it deposited into a bank account and know that we cannot do anything for 2 months until that's seasoned. But once it's in there and it's seasoned, it's all your money. It's good to go. We don't have to worry about anything. But again, they need to call me too, so we can pull credit, look at credit. A lot of times it's never as bad as you think. However, if there are issues on your credit report, we want to know now before you actually are looking at a house or before you sign a contract to buy, so we have time to take care of it and clean it up.
What kinds of things are going to harm you on your credit report?
Any lates in the last 12 months.
Okay.
So big thing, always pay your credit cards on time, always pay your car notes on time. Anything you have that shows up on your credit report, pay it on time. Do not let it be late, especially in the last 12 months. Now, don't freak out if 2 years ago you were unemployed for 6 months and your credit card got behind or your car payment got behind. If you've got it all caught up and you have not had lates in the last 12 months, you have nothing to worry about.
Great.
So, but you also have collections sometimes show up on people's credit report where it was maybe a credit card or some other type of account that went to collection and you didn't get it paid. There are times when that doesn't even matter. If it's 4, 5, 6 years old, it's not really hurting your credit at this point because it's so old, and we may not even have to say, hey, go pay that off.
Okay.
It may be that we might have to count $10, $20 a month in your payment as a liability on that owed collection, but we can count it, and that's all we have to do. So let us look at it. Let a professional mortgage lender look at your credit report so we can tell you what you need to do and don't need to do. Because sometimes paying off some of those really owed collections now could actually hurt your credit, where if it's an owed collection and it doesn't hurt your debt to income ratio, we'll just leave it on there and count a payment against it, and you're going to be fine.
So I see that a lot, people driving blind and thinking, oh, I need to clean my credit up before I go and talk to a lender about a house like it's a one-shot deal. Like you can only apply once and that's it. And if they tell you no, then you're never getting a loan again. And that's not how it works.
No,
not at all.
No.
And so what, everybody's focused on their credit score number, right? Everybody's, and with every credit card you have, they'll monitor it for you and tell you your score, and they're always going to come up with something different. They're going to be within 10 points of each other, but it's always going to be different. And so if somebody just wants to kind of gauge, do I have a good credit score? Like, what's the baseline of what they should be aiming for?
Well, of course, the highest credit scores are 850. So if you're in 800s, that is awesome. We love that. But that's very rare to see, to be honest with you. What we typically see are more 600s and 700s. And we do see 500s, which unfortunately that is the lower on the credit score. And that's where we're going to have to work on your credit.
Okay.
Because to get you into a mortgage, more than most, 580 is the minimum credit score, but sometimes that won't even work. It just depends at the overall loan situation.
Sure.
600 is usually that's a lot easier getting you into a loan, and a lot of the loan programs are good with 600, 640. So any of those ranges are good. But again, 580 can sometimes work if all your other compensating factors are good. And even if you're in the 500s, don't be discouraged. If you come to a mortgage lender and they're like, oh, you're in the 500s, you're never going to get a mortgage. That is not correct. Call me, because I would love to help you clean your credit up.
Sure.
I've had numerous buyers that we can guide them and say, here's what you need to do. Pay this credit card down, or pay this off, or pay this. Or sometimes, I hate to say it, I have to tell people, go get a credit card, because they don't have a lot of credit. And believe it or not, one credit card on your credit account can make a huge difference on your credit score. So come to me. Let me tell you what you need to do to get your credit where it needs to be. It may only take us 30 days for everything to show up on your credit report. It may take 60 or 90 days, but I'm happy to help you work through that to get you there, so that we can get you in the highest score possible, because the higher your score, sometimes the better your interest rate is. So it just puts you in a better position.
Yeah, absolutely. And, you and I worked on one. It's been probably 8-9 years ago. And you helped them clean their credit up for a year until they qualified. And they qualified, so they started, and then they did all the things you told them to do. And that was super helpful for them to get to a point where they were going to be able to finally see their dream of owning a home and not having to rent. And so, a lender, I call you my lender partner, because we work in this together.
Yes.
My people call me and they say, hey, I want to see about buying a house. And even if it is 6 months or a year down the road, we're still going to stick together until you're ready to go out and physically start looking at properties. We will work together until we get that all clear. Hey, let's go. And you say, okay, they're ready now. So how about student loans? Is that something you see hold people up, or what can they do with that?
It can hold some people up, depending on. Sometimes we'll get people, they'll have 3 or 4 student loans, no problem. We can count a minimum payment against them, and we can move right along. Some people have numerous student loans, which they do, start to add up. So that would be my one recommendation. If you do have a lot of student loans, try to work on them. Try to get a few of those paid off. And again, it all depends on the situation. Every situation is different.
And definitely don't default on your student loans.
No, definitely do not default. That's a government loan. If you default on that, that's going to hurt you in so many ways when it comes to buying a home. Or if you have student loans that you have defaulted on in the past, and maybe your credit is better now, but there's still those student loans outstanding, come to me. Let's talk about it. Maybe you need to go get a personal loan, or go refinance your car loan and get $2,000, $3,000 out to pay off those owed student loan debts. There are ways you can work around it that you might not always think about. Even when it comes time to buy a home, you can borrow against 401k and you're not penalized. So sometimes you can use some of that money. It may be there's a student loan that's really hanging out there and you just can't get rid of it. Maybe we can roll it into the loan and let that be part of your closing cost. And seller can pay some costs for you. Different ways we can work that. So there's so many things we can do if we know ahead of time to work on it.
Absolutely. So there's like lots of creative ways to make things happen so that you don't just look at it yourself, diagnose it and go, oh, this is hopeless. I can't do anything.
Correct.
And so there are programs where they're going to be wanting to save up for a down payment. And you've got your traditional routes, your FHA loans that are 3.5% down.
Correct.
And then you've got your conventionals, and your conventionals start at 5?
3%. We have a
down.
97% loan for first-time buyers that they can get in on a conventional loan at 3% down payment.
Awesome.
So that's another great option. And then from there, we have several 100% loans.
Yes, talk about those.
Well, of course, we have a VA loan. It's always 100%. It's awesome, but it is for veterans. So you have to have been in the military and qualify for that, which you just have to have a DD-214 and served in the military. But VA loans are wonderful, wonderful loans. They're 100% financing. They do allow the seller to pay your closing cost. So literally you can get into a home through a VA loan for zero money out of pocket.
Yeah, those are fabulous programs.
They are. We love our veterans. So anytime there's a veteran out there, I would love to help them get into a home.
Yes.
And then we also have, especially in this area, you have the USDA Rural Development Loan that is also 100%. So again, the seller can pay some closing costs, and typically the buyer can get in for no money out of pocket. Now, keep in mind, you might need a little bit of money up front with earnest money that's required for the sales contract. Appraisal money that is required for the loan, but that's usually going to be a total of about $1,000. And I have seen customers at closing get that money refunded back to them at closing.
Right.
So if the USDA Rural Development Loan, it is income limit based and it is property based. So the property has to be in an eligible area, which a good majority of Cleveland, outside of the Cleveland city limits, does qualify for USDA.
Yes.
So that is a great loan, especially for first-time home buyers. There is an income limit, so we have to watch that, make sure the borrower doesn't exceed the annual income limit on that. Then in Tennessee, we also have THDA, which is a combination of an FHA 3.5% down payment loan along with a bond from the state of Tennessee that they give you a 3.5% down payment to cover your down payment and closing cost. So you end up being at 100% on the loan. Now with the THDA loan, that is a second mortgage for that down payment that you will eventually have to pay back if you refinance or sell the home. If you live in the home for all 30 years, you would never pay that second mortgage back. However, you will have to pay that second mortgage back if you do refinance that loan or sell that home before that 30 years time is up.
So it is the full 30 years on that one?
It is the full 30 years now. It used to be different, and it was over a time frame. But now you have to live there full 30 years for it to be completely forgiven.
Sure.
So as long as you plan to live there forever, that's fine. But otherwise, if you do sell the home in 5, 6, 7 years, then you're going to have to pay back a portion or all of that second mortgage.
And hopefully you have some equity at that point in time
Correct.
that'll help absorb some of that so that you won't be, you'll still walk away with some money.
Right. Yeah. You'll still net some equity out of that, but at least it helps you get into that home and you're not just blowing your money every month in rent. You're not paying someone else's mortgages. I have customers come up to me all the time. Yeah, but I don't have a mortgage right now. Yeah, you do. You have your landlord's mortgage because if you're paying rent, you are paying a mortgage for your landlord.
Yes.
So there's a big difference. You'd rather pay your mortgage than your landlord's mortgage.
Right. So. Exactly. Exactly. So let's take a moment and tell them how to get a hold of us since we're their trusted partners for buying and selling, but also for getting that mortgage and getting started in this whole process. So I can be reached at 423-802-0875, or you can find me online at calfeeandcompany.com.
Awesome. And you can reach me, Michelle Tennyson, at 423-316-3411, or you can go to our website at highlandsmortgage.com/Michelle Tennyson.
So we've talked about some zero down programs. Are there any more of those?
I do have one
Yes,
more
let's
I'm really
hear it.
excited about, because it is a Highlands mortgage that we've recently taken on, and it is kind of like our THDA, but the positive with it, there is no down payment. There is no income limit, and there is no property limits. So it's any house, anywhere you want to buy it, and there's no income limits. And the credit score, whereas THDA does have a minimum credit score of 640, our 100% program, down payment assistance program, you can go down to 600.
Okay.
So as long as we get an automated underwriting approval in our system, which we can actually do sometimes to 500 depending on the situation, but ours is 100% with a down payment assistance program. Again, you'll get the down payment of 3.5% or 5% depending on which loan program you want to go with. Now you do have to repay these loans, but it is a way to get you into the house.
Sure.
And it's repayable with a small monthly payment. It's amortized over 20 years. So it makes the monthly payment very small that you're paying back.
Do you make one monthly payment?
No.
You make two?
You make two.
Okay.
You make your regular mortgage payment, and then you would make your second mortgage payment separately.
So I could see that being super helpful for someone that, let's say, you've gotten out of college and you have that first job, but you know that you're going to go further in your career. Like, that there's a next step. And so you want to buy now. So you buy now with the zero down, knowing that later on you're going to have that better paying job, that better paying position. And you could, in essence, pay. Maybe you wanted to pay that one particular piece of it off. That was the down payment or what have you. It's kind of like a bridge from here's where I want to start. Here's where, I think I'll be. So I could see that being the perfect product for someone that knows that they are, going in a path to where they're going to have, more income to work with later.
Correct. And I mean, for those borrowers, like with the USDA or the THDA, you've got some borrowers that are just borderline on that income limit, you know, but literally if you make $10 more than that income limit requirement, they will not make that loan.
Yeah. And the house that you fell in love with may not be in the right zip code to where it qualifies for USDA.
Correct.
So to have that other option is really important, because I mean, I've seen a lot of houses where people are like, I need a USDA, I need a USDA, and the perfect house for them comes on the market, but it's not in the USDA allowable zone, and then they're heartbroken. So that gives them just that other option. And this is specific to your company.
Yes, it is a program we have.
Yeah,
correct.
Absolutely. So that is great in a lot of ways.
Yes, we're excited about it. And so far, all the ones that we've done, everything's turned out great. They're very easy to do. So we are looking forward to really helping a lot of first-time buyers with this program.
Absolutely. And what I love about helping first-time buyers is that we get to walk through that process with you start to finish, and you're fresh to it. So we get to kind of teach you and show you how it all works and what you need to think about, and kind of going back to what you need to have. I don't want any buyer to come into this with zero in their bank account, because that makes me uneasy thinking that you're going into this huge commitment and you don't have any savings, because you always want to have savings put back, because you're going to become a homeowner. Therefore, when the water heater goes out, or this breaks or that breaks, you're responsible for keeping that home up now that you're a homeowner. So you don't call the landlord and say, hey, come fix this for me. That's not how it works. And so you want to make sure that you have some buffer put aside. And then also, I wouldn't be doing my job if I felt like I was leading people down a path where they were not making the best financial decisions for the long haul.
And it was going to hurt them
Absolutely.
short term. Yeah.
And you also need to set aside, like you said, some money for, we do what's called earnest money. And that is a good faith offering to the seller saying, hey, I am serious about buying your house, and that money goes back to you as you close. You get that back, but you need that money set aside, and it could be $500 to $1,000 depending on the price of the home. And then a home inspection, you need to set aside money for that. And then I always go back to telling my buyers, listen, you also need to think about the fact that when you're turning on utilities, there may be some charges and some fees associated with that. So make sure you have that covered. So all in all, I usually say have about $2,000 set aside for this process. So that you have your money to pay for the appraisal, the money for a home inspection, money for turning your utilities on, and your earnest money. Just make sure you've got that set aside. I mean, it could be that you got a tax refund and you could just go ahead now and take, because tax refund season is upon us. Take $2,000, or if you can spare a little more, put it and sock it away in a savings account. So it's sitting there for you. And then that way, that you've got that money that you've got to work with to get you through the process, because homeownership is so much more than just getting a mortgage. Homeownership is now, if you've never sat down and figured out what your personal wealth is, what your worth is, right? I mean, worth in a financial sense. We won't get into the psychological part. We're all worthy. But if we look at that, you just made your wealth factor go up, because now you've got this property that is in your name that's probably worth $300,000. So now that's part of your net worth. That $300,000 home is part of your financial worth, and that's huge. That I remember when we bought our first home, it was $56,000. And I mean, it was just like the biggest purchase ever. And I thought, wow, I mean, we've arrived, we've done this. And then, each home that I've owned over time has been a little bit different. And sometimes I just look at it and I think, wow, and home is an important part of our life. It's not just about finding a home and it's a place where you lay your head and you sleep at night and make meals, and that's all it is. Because when you have that home that's yours, that you worked hard to get, one, you've accomplished financially, you've been able to show that you're a financial responsible person, and you have gotten to that point where you've been entrusted with a mortgage to pay back to own this home, but it's yours. And the landlord can't just pop in and say, well, I've decided to sell this property, so you got to move. Like there's no unexpected, oh my gosh, you've got to move out now. It's yours. If you want to paint it purple, paint it purple. If you want green carpet throughout, have green carpet. It's yours.
That's right.
And you can do whatever you want to your home. And I think that is something that should be on everybody's, accomplishment wish list, because when you make that first home purchase, there's just something that's really, really special about that.
And all the memories you're going to fill it with. So that years from now, you are going to sell it eventually, a lot of times when it's your first home, but you sell it with all these memories that you will always have forever. And that home a lot of times encapsulates those memories for you. So it is a big purchase, and it is a big deal for you financially and for your future family to move forward in life. So it's definitely a great thing to do, and tax season is the best time to start thinking about it, because there are so many people getting refunds that will have that money that will help them get into a home.
So if you think about what you're going to do with your tax refund, I mean, there's lots of things you could do with it, and think about setting some money aside and just stashing that away so that you can make the phone call, you can do the application. It's literally you can do it all on an app.
Correct.
It will take you 5 minutes to do an application to see what you qualify for with a mortgage. And then they're not just going to get whomever calling them, you're going to call them.
Correct.
And you're going to talk to them, and they're going to get you. And then, call me, and I'm going to work with you. Even now, if you're not ready for the next year, I'm going to start working with you to feel out what it is that you're looking for. What are your hopes and dreams? Sometimes I just have to have a conversation and say, yes, that's doable. Or, with this might not be doable, but we can do this because of where the price points are right now. So if we had these 4 things, would that be something that you would be happy about? Everybody wants, a certain thing when they think about what home looks like for them. Mm-hmm. And so we work together to make that process smooth, to make it happen, and to sit down and watch you sign those papers and to be ecstatic when we hand you the keys and it's yours, and you get to make that first memory with your family. And it could be that, you're single and you're thinking, well, I can just keep renting until it's not just me. Well, you know what? If you're single and you want to go and buy a house, that's an investment that you could turn into a rental later. Yes. When you do find your significant other and you get married and you decide to start a family. Maybe that house isn't going to be big enough, but you could keep it and you could rent it out and then move to something that's a little bit bigger. So there's so many options that you can consider.
There are. And we even have a program where we can pull, instead of pulling a hard hit credit on your credit, we can pull what's called a soft pull credit. So it's not even going to hit your credit because that's one thing a lot of people should know. Don't go and just let everybody pull your credit. Right. Because every time your credit gets pulled, it is a hard hit typically if you pull a full credit report. And the credit inquiries can bring your credit scores down tremendously. Mm-hmm. But we can do a soft pull credit to look at your overall credit, to get an idea, see where you are, and help you know what you need to do next. And then a lot of times for first-time buyers, first question I ask is, what can you afford? And of course, some know right off the bat, I pay this much in rent. Some still live at home, and I'm like, well, you're not paying rent. What do you think you can afford on a monthly payment? And so sit down and look at your budget and see what you have extra. Or if you are having the wonderful advantage of living at home where you can save up money, which I do recommend, take that money each month that you think you're going to need for a mortgage, $1,500, $1,800, $2,500. Put that aside in a savings account for 3 or 4 months. Yeah. See how it is to live with that kind of monthly payment. But yet you're putting it in savings, which you're building the savings for either a down payment or moving expenses. And you've just lived for 3 months the way you're going to live with a mortgage payment. And now you know you can do it.
Great advice.
So I think that's a great way to see where you are. Like I even told my son, who has a home right now, but they're thinking of eventually buying something new. I said, well, you know what you pay on your mortgage, and here's what you think you're going to want to be at for your next mortgage. That difference, take it and put it in a savings account each month. See how tight that makes your budget. Can you still go out to dinner or go on dates every once in a while? And if you're still able to do that, then you know you're going to be able to do the next mortgage just fine without any worries.
That's great advice. And the reason why we say call your local people and don't just hit an online button is because you're going to get that kind of advice, and it's going to be a long-standing relationship. It's not going to be you're not ready, click deny. Yes. It's going to be, okay, you may not be ready right now, but here's what you need to do to get ready, and we're going to touch base throughout that process, and then when you're ready, I'm going to be here with you, and we're going to celebrate that moment. So thank you for giving us all this good information, because it's so helpful for people to understand that it's not as scary as it may sound.
It's not, but it's a great adventure that I love to enjoy walking people through. So
give them your contact information one more time.
Okay. Michelle Tennyson, Highlands Residential Mortgage, 423-316-3411.
And I'm Lisa Calfee with the Source Real Estate Group, 423-802-0875.
Do you imagine a career with flexibility and limitless income potential? It's possible by becoming a Realtor. The River Counties Association of Realtors, located right here in Cleveland, Tennessee, is ready to help you unlock your potential. We're your go-to resource for guiding you to obtain your Tennessee real estate license. We're more than just realtors. We're a vital part of our community. Partnering with local charities, we work tirelessly to make a difference. Join the River Counties Association of Realtors today, where your career can thrive and community can too. Visit rivercounties.com or call 423-476-5912. Your new path awaits.